Man, you guys are relentless with late. I hit the button at 6:30, everyone. I hit it at 6:30. That's my story. It started 6:30, and we're not changing the story. So, before we go any further, for the AI bear rant that is going to help flush out the ideas for the long post over the weekend, please take a moment, pause the video, read this disclaimer. I am not your financial advisor. I am not a financial advisor. I just do a lot of research. Please take everything I say with a grain of salt. We're going to discuss a lot of things on this pertaining to AI. Please do not make any decisions based on what I say. These are just a lot of facts and then an opinion based on what these companies reported on the Q3 earnings. So, once again, please pause this and read the disclaimer. Thank you very much. So, a lot of people freaking out today. We got the markets finishing the day down big. NASDAQ down 398 points. The Dow Jones down 245 points. And the S&P down 73 points. Here's the thing. The S&P is 6827 and people are freaking out. Crazy. I don't understand why people are freaking out. It doesn't make sense. So the one number that I am not able to find because it's not updated on Seeking Alpha yet. Does anybody in the chat know what the EBITDA for Q4 for Broadcom was by any chance? So the reason I ask is because I want to update my spreadsheet and I need the EBITDA number. They reported adjusted EBITDA and I don't know what they back out to get a straight EBITDA number because I don't follow Broadcom that closely at all. So if anybody knows, please let me know. So that's the only number I need at the moment. So it doesn't look like anybody knows. I don't know why the report adjusted. It doesn't make any sense. It's very annoying. So thank you everybody for being here. Really appreciate it. Oh, Chels, how are you? All right, so today, AI trade unwinds. I mean, that's pretty much the theme of the day. After Oracle's earnings and then after Broadcom's earnings, that the biggest spark was Broadcom's outlook. And while the results were really good, the message around guidance just wasn't strong enough. And Broadcom specifically raised concerns about the AI system's economics, including margin pressure. And that is probably why we saw a big downturn and pulled down a lot of stocks today. I really don't believe Broadcom has anything to do with NVIDIA. It doesn't have anything to do with these other companies. So when we combine Oracle's weak and uncertain outlook, some would say that their CapEx is excessive. Some would say their CapEx compared to their debt is excessive. Some would say that the amount of debt that they are taking on is excessive. Now, I think that this is ridiculous. I really do. Because we're in a situation where the largest companies in the world are telling us exactly where we're going. This is not one CEO in one company going off the rails, okay? This is a situation where everybody is spending on this. And we have a lot of backlog. Microsoft. So let's frame it like this. Before I go into the numbers, let's give some hard facts, okay? Some hard facts. So I went through all the different earnings calls that matter, okay? We're going to start with Microsoft. Straight facts. Cloud and AI. Microsoft cloud revenue, $49.1 billion, 26% year-over-year increase. Intelligent cloud revenue, $30.9 billion, 28% year-over-year increase. Azure and other cloud services, 40% year-over-year increase. They plan for their data center and AI capacity build out to increase their total AI capacity by 80% year over year. And Microsoft is looking to double their data center footprint over the next 2 years. I mean, that's pretty insane. Azure AI Foundry positioning, okay? 80,000 customers, not 80,000 customers are using Foundry. 80% of the Fortune 500 companies, and there's access to 11,000 plus models, including GPT-5. On the backlog and RPO, commercial RPO for Microsoft was $392 billion, 51% year over year. Commercial bookings, 112% increase year over year. And it was driven by Azure commitments. Let's go to Amazon. Okay. AWS in Q3, $33 billion in sales, up 20% year over year reacceleration. You have Amazon Connect reaching $1 billion annualized revenue run rate, which is pretty ridiculous. Amazon did not report a full RPO number, but on the earnings call, they did say AWS backlog, $200 billion. Pretty impressive. Alphabet. I mean, everybody knows what happened with Alphabet. Revenue backlog, $98.4 billion. Pretty huge. And Google Cloud just continues to go higher. I mean, they're on their 7th gen TPUs, which made the catch a bid. Pretty interesting. They're saying that they're doing 7 billion tokens per minute on Gemini. They rolled out AI mode globally across 40 languages, and they're getting 75 million daily active users. That's a lot of active users on AI mode. So they also launched Gemini Enterprise, and they're saying that 2 million plus subscribers across 700 companies are using it. And for their backlog, 155 billion for Google Cloud, 46% quarter over quarter, not year over year. Exponential growth. Now, Oracle, you have AI infrastructure, which they said they are on track to deploy 96,000 plus NVIDIA GB200 Blackwell chips, and they're taking deliveries of AMD MI355 capacity at their Texas supercluster. You also have 523 billion in remaining performance obligations year over year. And their RPO increased 68 billion in Q2, which is a 15% increase sequentially with new commitments from Meta and NVIDIA. So, does this sound like the bears are in control, or does this sound like everybody is expanding their AI needs and their capacity? I mean, this is a situation where the bears are just wrong. Now, are there companies that are expensive? Absolutely. There's absolutely companies that are expensive. And if you heard me would admit earlier, this is a situation where maybe some companies should not have gone as crazy as they did. But should NVIDIA be down where it is? I'm going to bring up Webull since it's actually nicer to look at than just a regular chart. We're going to share the screen. I mean, the fact that NVIDIA was down over 3% today is a little crazy. A little crazy. Now, let's see where Broadcom finished. Am I surprised about this? No, not at all, because Broadcom was massively overvalued, in my opinion. Massively. But this doesn't mean anything for NVIDIA. The AI bears want us to believe that there's a problem with AI. There's not a problem with demand. All of the GPUs, I'm reading the chat, everybody. I'm not calling things out, but you guys make me laugh. Don't worry. I'm going to try not to call out individual companies. Maybe I will. We'll see. The reality is Broadcom making comments on the earnings call has nothing to do with NVIDIA demand for chips. Has nothing to do with it. And when we look at where NVIDIA is, it is pretty crazy. Now, I'm going to show you some updated numbers, and we are going to exclude EBITDA from this. And I'm going to show you. I'm going to update the rest of it in real time. Make it bigger. So we have NVIDIA, AMD, Broadcom, and Meta. Okay. We're going to get rid of EBITDA because I don't have the new EBITDA number for Broadcom. So we're going to throw it down there and get rid of it. Get rid of the EBITDA margin and price to EBITDA. Give me 1 sec. Let's get Broadcom updated. Broadcom, I updated that number. Operating income, 25, 7. Cash from operations. Okay. Wow, you got that's really that small on there. I'm sorry. Hold on. Yeah, I need to expand it in order to update it. I apologize, everybody. So when we look at this, this is crazy. So Broadcom is still a bigger company than Meta, which is wild. Let's see how much bigger of a company or how much small. Yeah, so we'll do it like this. Meta has 76 billion less in market cap, but on a TTM basis, they're still doing 125 billion more revenue than Broadcom. Operating income, they're still generating $55 billion more. Cash from operations, 80 billion more. 80 billion. I mean, it's insane. They're spending 62 billion more in CapEx and still generating 18 billion more in free cash flow, and they're doing 35 billion more in net income. Yet Broadcom's still a bigger company. Makes 0 sense. And that's after Broadcom just fell 11.5%. I mean, you're able to pay 20 times operating income and 15 times cash from operations for Meta, yet Broadcom, 65 times operating income and 62 times cash from operations. When we look at NVIDIA, I mean, I sure as hell would rather pay 38 times operating income for NVIDIA than 65 times from Broadcom. Now, what happened with Broadcom and what happened with Oracle does not matter for the hyperscalers, for the simple fact that demand is not shrinking. What we heard on the Oracle conference call is that they need to get their hands on every single chip, and the RPO that stretches out several years is more than Microsoft. The demand from their clients for these services are there. It's there from Oracle, Microsoft, Amazon, Alphabet. There is a need for this. So thank you, AI bears, because you are giving us a buying opportunity for the future. And I don't think we should be scared of a retracement here. Now, I thought we were going to go up. I thought that we would be getting a Santa Claus rally. And while we still may, I did say the big chance coming into this week outside the Fed was Oracle and Broadcom spooking the market. The reason why Oracle spooked the market is because they have a net liquidity position of negative $80 billion. Now, once again, Oracle tapping the debt markets does not mean anything for the hyperscalers. Has nothing to do with it. They're also doing negative free cash flow. Has no impact on the hyperscalers. And it certainly doesn't have any impact on NVIDIA. So it's pretty wild. Now, what I want to do, I want to see the actual valuations right now of where we're at. So I have just the Mag 7 somewhere in this. So here we go. We're going to add Broadcom to this, and we're going to get the updated numbers for Oracle. I wonder if I make everything bold, if it will be easier for everybody to say. Yeah, I think that's a little easier. So let me get Oracle's updated numbers. And let's see where the street has everything. All right. And we need Broadcom. And I'm doing all these updates live in the sheet that I share with everybody that's part of the Milk Gang. So I'm planning on cleaning everything up this weekend and making it more legible. All right, Broadcom. 1016, 1358, 1762. No, that they just finished their 2025 fiscal year. So hold on. I will get their EPS number for the year for this. So this, I'm sorry, this needs to be 1016 and 1358. I mean, that drop was warranted for Broadcom because it just brought the forward PE down to 26.5 times. It's actually not horrible. Why can I filter? All right. Broadcom. Where's their EPS for the year? So gap was 174. Let me just get the monthlies on this. Give me 1 sec, everybody. Quarterlies. That would have been something, wouldn't it? That can't be right, can it? Let me just make sure. Q4 they did $1.95, $1.69. I'm sorry, $1.95, $1.69, $1.58, $1.60. That is more reasonable. Wrong company. Broadcom, where are you? All right. So a lot of growth for Broadcom, and it is back down at a reasonable forward level. It's trading at 53 times what they just finished and 35 times 2026 earnings. So it's interesting here. But this does not look like a market that is expensive by any means. I mean, NVIDIA at $300 a share, and we did this last night just to see where it would trade, trading at 31 times. If we actually put NVIDIA's real number here, I mean, NVIDIA is at 18 times earnings. I mean, does this look like a market that's expensive, everybody? This doesn't look like a bubble. So from an EPS standpoint, I don't think that this is a bubble. Now, I do think Broadcom is still overvalued here when you look at the where it's trading versus Meta and other companies. But this is not bubble territory by any means. So I think the AI bears are giving us a huge gift because they're putting us in a position where we're getting NVIDIA and Meta under 20 times forward earnings. I mean, how are we going to get upset at that? I can't get upset at that. Now, there are definitely companies that are expensive. And I'm going to try not to call out individual companies, but we know there are a lot of companies that are expensive. Now, I'm not going to call out the tech companies, but we do know, except for Tesla, Walmart and Costco trade at bigger valuations than the Mag 7. So this is what I'm going to say. The bears are betting against innovation. The bears are betting against technology. The bears are betting against every titan of business in the technology sector that has shaped technology for the past couple of decades. How do you bet against companies that have shaped where we are today? They're the ones in control of where we go tomorrow. How are we going to go against that? I think that there are companies that are expensive, and there are companies that certainly trade at excessive valuations. But those excessive valuations shouldn't matter for the market because they're either not part of the S&P 500 or they represent such a small portion of the S&P 500 that it shouldn't matter. And all these companies should not be intertwined. I mean, for there to be concerns about OpenAI starting a data center late with Oracle, they have 592 billion of RPO. Somebody's going to fulfill the need if OpenAI starts a data center late. It's just crazy. It's crazy. If NVIDIA keeps going down, and look, I have a big position in NVIDIA. I am not buying NVIDIA, but if it goes below 170, it gets into a territory where I feel like I have to start buying again because the numbers just don't make sense of how cheap it is. You know, the bears are acting as if this is going to be a boom bust cycle this year in 26. We're not seeing that. All we're seeing is every one of the hyperscalers saying that they're going to spend more on CapEx. And if they spend more on CapEx, what does that mean? That means more money is going to NVIDIA. It'll mean more money goes to OpenAI and more money goes to Broadcom. NVIDIA is going to be the big winner in this. And I think ultimately I will be a winner in this because I think NVIDIA will go to a level next year that is significantly higher than where it is today. Now, if nothing has changed with where the earnings calls, it's so funny. Earnings were 3 weeks ago. You know what I mean? Maybe more. 4 weeks ago at this point. So NVIDIA was 3 weeks ago, and I guess the other ones were 5 weeks ago. They were just here. I guess everybody forgot what everybody said on the conference calls, and everybody's shock and awe that NVIDIA put up a 63% quarter-over-quarter revenue increase. But the street is expecting 61 analysts are expecting a median 315 billion of revenue. The high is 412 billion and the low is 226. I mean, we know 226 is not happening, but 412 billion on the high, okay, 96 billion more than what the midpoint is. But if we do 315 at a 50% margin, and right now the profit margin is around 55, 56%, okay, you're putting NVIDIA's net income at this point at around $157.5 billion. It's the most profitable company at that point in the market. So I don't know. I don't know what the bears are seeing here. I really don't. And it's weird that they want to bet against success. Technology has never stood still, ever. It always innovates. And to think that these people are trying to bet against success and create a narrative that we're in a bubble, and think about this. A bubble starts very small and it can keep expanding and expanding and expanding. Something needs to happen for a bubble to pop. And I would argue that every time you get a massive drawdown, something pops. But guess what? It keeps going back up. So to think that people are getting scared about today's numbers instead of looking at this as an opportunity, where I did not want to exit that out. I'm sorry. So to think that we're in a situation where you could have bought the Qs and just go straight index on. Why did it not go to the Qs? I clicked on it. There we go. I mean, the Qs year to date are still up 20%. Is this dip scary? Sure, but we just got to 600 not too long ago. Have we ever been to 600 before on the Qs? No, we haven't. We just got there. So if you go and you look at a 10-year look, the blip is nothing. People are freaking out for no reason. It's quants, it is stop losses, it is traders. Over the long term, the biggest companies in the market are trading at good valuations. There are companies that are trading at excessive valuations, and that will likely get flushed out. But to think that Microsoft and Amazon and Alphabet, Apple, Meta, NVIDIA are just somehow going to reverse and we're going to be in some huge bear market, I'm sorry, but I'm not buying that. I'm not buying it. I mean, you could have said the same thing during the pandemic. You could have said the same thing in 2021. And while 2021, it took 2 years to get back to where it was, think about where we are now. And if you think about this thought experiment. If you caught the top, what the hell are the chances you actually got back in at the bottom? People are probably still shook over here. I've never met somebody that can time things perfectly. I sure as hell know that I can't. And we'll see what happens. But this is not a reason to get scared if you're in high quality names. Now, if you're in super beta names, different story. And I'm going to call out a company, okay? I'm not going to call out a company that I think everybody's in. But how about this? And for all the kids, earmuffs, okay? Earmuffs. No shit. Like, no shit, Oklo's down. Negative operating income. Do they even generate revenue? No. I mean, when are they expected to generate anything? Oh, they're not even expected to do any revenue until 2027. You can't even get more than 10 analysts to tell you when they're actually supposed to do revenue. And there's 4 analysts that think that they're going to do $1 billion of revenue in 2031. That's 6 years from now, everyone. 6 years. That's insane. That's insane. There's no way to project out this far. So a company that's going to lose money for the next 4 years and maybe make money in 2030, you're paying for something that's trading at 164 times. If this is even an accurate number in 2030, there's no way to know. At least with companies with track records, you can kind of project. This is such a fictitious number. Nobody knows. It could be $1.63. It could be 63. It could be 1 penny. Who knows? But the bottom line is this is still a $16 billion company. This is also a company that in October was at 174. I mean, what did everybody think was going to happen? This was going to 500? Like, stop it. I don't get it. I don't get it. But once again, there are companies that are expensive in the market. Do they deserve to go down? Well, I don't see an investment case that warranted what it did, and I don't see an investment case to keep it going up and to the right. I think it makes sense that this sold off between profit taking and the fact that this company is not going to generate revenue for another 2 years, and they're not expected to be profitable for another 6. So there's pockets that are expensive. But just because Oklo caught a bid and is now retracing, that means nothing for AI. So I think that everybody needs to take a step back and realize that because we're in a situation where the bears are controlling the narrative today does not mean that they're going to control the narrative next week. And just because the number in the brokerage account is lower right now than it was yesterday, if you didn't need the money and if you didn't need to sell next week, most likely you're going to be able to wait this out. And most likely the S&P in the future will be up. So I just think that we need to use logic. We need to look at what the titans of industry are saying instead of bears that want to bet against success. It's crazy. I mean, look, every company drops. Every company. Look at Amazon. What happened to Amazon in 2021? It went from 170, 180, 184, okay, all the way down to 84. More than a 50% drawdown. Amazon's one of the best companies in the market. These things can happen. I'm not going to sit here and say that this can't happen again. It can absolutely happen again. But over time, it corrected. Now, Amazon may not be doing what we want to do right now, but it is hovering around all-time highs. And Amazon's got a pretty good story for the future. These things happen, okay? Drawdowns and retracements happen. But I would rather put money on the fact that Amazon is going to reach $1 trillion revenue in 2029 than go into something like Oklo, where I have no freaking clue when regulation is going to happen and when they're actually going to be able to produce product and actually bring SMRs online. Okay? I have no idea when that's going to happen. But $1 trillion in revenue for Amazon, when I look at what the growth rates are over the past couple of years, I can model that and I can make it work. And then when I look at the earnings for 2029, it's trading at 16.5 times where the analysts think earnings are going to be. And when I think about the ability to utilize AI and robotics to increase margin, Amazon's in a position where they could get to 18 to 20% margins, generate 180 to 200 billion of operating income, maybe not net income after taxes, but operating income. So why wouldn't we want to scale in to an S&P 500 index fund if we don't want to go into individual companies? I mean, you look at the holdings on the SPY. It is heavily weighted tech. 40% of the portfolio is in the top 10 positions. NVIDIA is 7.6%, Apple 7%, Microsoft 6%, Amazon 3.8%, Broadcom 3.3%, Alphabet basically 5.6% between the two classes of shares. Meta 2.4, Tesla 2.15. I mean, I don't see a long-term problem. I see a situation where, man, in 3 days, a lot of people are going to be happy. You want to know why? In 3 days, a lot of people get paid. And what happens on payday? People take part of their check and invest into 401ks, 403bs, SEMPs. Oh, a lot of those assets are S&P 500 index funds, total market funds, or different variations of target date funds, ETFs, and mutual funds, because most employers do not allow you to hold individual stocks because of IRSA. So people are going to be able to buy at a cheaper price than they were able to buy in the middle of this week. Not a bad trade-off. So I think we need to normalize not looking at things minute by minute or caring about price action day by day, and have to really think about these are markets, they fluctuate, and in 2025, the access to information is at our fingertips like we've never seen before. And markets are going to move quicker and more violent. But in the end, it's going to be the same story as always. The markets will ultimately find a way higher because ultimately GDP is increasing. And if GDP is increasing, it means American companies are generating more revenue. And if they're generating more revenue, they are likely expanding their EPS. And if they are expanding their EPS, most likely they're getting good multiples. If they're getting good multiples, that should mean that over time the market is going to go up. So I'm not worried about this type of stuff. This type of stuff actually makes me want to buy more. And I'm happy that when I look at the retirement account, I know that I'm buying more at a good price from a long-term perspective. The market can go down 10% from here. It absolutely can. Is it likely, though? I don't think it's likely, but dips are opportunities. Show me one dip that did not correct. Show me one dip where people weren't buying on the way down. Show me one dip that stayed in a depression indefinitely. It doesn't happen. The crash of 29, Black Monday, the oil crisis in the late 70s. I mean, let's go to macro trends. And I am going to shout out macro trends because I think that they have the best charts. Why can't we reach it? All right, we just got there. So I think that macro trends is the number one aggregator, everything at your fingertips. It just has everything ready, no matter what you want, from market indices to metals, oil, gas, commodities, economy, interest rates. They got everything. So when we look at the indices, okay, but what are we really scared about, everybody? Like, are we going to let the Bears, who are probably sitting on their sidelines, licking their lips, saying, "Oh my God, go lower so I can buy"? They're never going to buy. They're never going to buy. So the last time you had a negative year was 2022. And then 2018, 2015, less than 1% down. You had a flat year in 2011. You had a huge drawdown in 2008. But 2008, think about this, financial crisis, okay, which lasted way longer than the freaking pandemic did. Financial crisis happens. You're down 40% on the S&P. And then what happens? 23.5%, 12.5%, flat, 13%, 29%. 11%. I mean, gaps get filled. And then the dot-com bubble, for as scary as people want to make it out to be, 10%, 13%, 26%. Then it has growth, big drawdown, and then more growth. Are we going to be in a scenario where we have a dot-com bubble and then a financial crisis afterwards? I don't know. I don't have a crystal ball, but the way the economy looks, it doesn't look like that. But the last time that we had 2 consecutive down years was in this trend. You had 2000, 2001, and then 2001, 2002. The time before that you had that was the 70s, people, the 70s. So I can't tell you when the next down year is going to be. Down years happen. Volatility happens. But overall, this is a great freaking chart to look at. And I just don't think that we're in a situation where, at least I'm not getting worried. So we'll see what happens. But I don't think people should really go crazy at all. Thank you for the new members. Really appreciate it. For the new members, check out the posts on YouTube. I have some spreadsheets on there that you can have access to. Matt, thank you again. I really appreciate it. I do this for all of you. Thank you so much. Like hanging out with everybody and just trying to talk about stocks. I mean, it infuriates me when the AI bears come out like this. Chels wants to know, Steve, do you believe in the periods when to make money chart? I've never even seen the periods when to make money chart. If you link it, I will go to it. Or if you tell me where it is, I will go to it. I have no idea what that chart is. Look, for those of you who are asking if 2026 is going to be a bear market, look, nobody can tell you. Thank you, Dougie. Dougie's right. They aren't AI bears. They're just people who want to be anti-trend. Sure, because they want to sound smart, and they sound dumb until something happens, and then they sound smart because they can say, aha, but then what happens the next week? I mean, the next week they look dumb again. So it's crazy. I mean, I'm not even going to address that comment. But yep, Dougie, I agree. And look, maybe Burry started all this, maybe he did. Look, I can't tell you if there's going to be a bear market. What I can tell you is we got Fed data, okay? And for anybody who went through the actual economic projections that they gave us, they're projecting that in 2025, GDP growth is going to be 1.7%, measured Q4 over Q4. For 2026, they're projecting 2.3%. For 2027, they're projecting 2%. And in 2028, they're projecting 1.9%. So if you have a situation where the Fed is projecting GDP growth over the next 3 consecutive years, it's going to be hard to get a recession, especially when they're saying that unemployment is going to top out at 4.5% this year and then ease to 4.4% next year and 4.2% in 2027. Now, these are projections / estimates. They may not come true, but this is the data that we have. And for a Fed that's been so concerned about inflation, they're saying that headline PCE is going to come in at 2.9% for 25, fall to 2.4 in 26, and then 2.1 in 27. And guess what? Core PCE, which strips out food and energy, is expected to get down to 2.1% in 2027 also. So in a multi-year situation, if inflation falls back to the terminal rate you have rates falling, and you have GDP growth happening, it's going to be pretty hard to get a story where earnings are not expanding and companies are not doing better. So, I'm not worried, but I'm also a long-term investor, and I'm not in high beta names. For people that are in high beta names, especially if you're on margin, I gotta say, you're probably feeling pain. I don't think that's the majority of people, though. So let's see how long this lasts. I don't think it's going to last too long, but I fully believe the AI bears are wrong. I will be. So if you follow me on X, okay, I have made two very long posts. The last post that I did about this was, when did I write this? In November, okay? So I'll link it in the chat if you guys actually want to read it. But this is how long it was. And the title of it was, Dear AI Bears, This is Not the .com Bubble 2.0. Now, I went through drastically every detail of the .com bubble and why this is excessively different. And I even broke out the individual companies, okay? I am planning on doing another one just like this, discussing the Fed and everything. And this is going to come out this weekend, most likely. I'm going to find a way to get it done between everything else I'm going to do, because I truly think that they're freaking wrong. Thank you, Chels, for putting it out there. I'm going to put it out there also. I mean, I'm not seeing a situation where there's anything for me as a long-term investor to be worried about. So we'll see what happens. We'll see what happens. But this is getting crazy that because of Oracle spending on CapEx and tapping the debt market, and Broadcom's making comments on their earnings call, that people think NVIDIA is going to have a problem. They're not related. Chels, you found the chart? I must have. If you found the chart, I see somebody say great chart, Chels. So if you found it, send it. I'm not seeing it in here. It's in my DM. Okay, hold on. Oh, it's in the DM on X. Okay. Thank you. I found it. Okay. Let me bring it up. And this is the first time I'm seeing it, so. Interesting. I've never seen this before. Okay. I mean, look, basically, everything moves in cycles. We know that. And there's definitely other cycles to look at. So, interesting. I'll have to see if I can incorporate this into other stuff. I did not get a chance to look at CNBC today. Did anybody say anything remotely interesting today? Oh, God. Fast Money Traders Talk report Oracle is delaying data centers. Let's hear it. I know Mitt told me some of this. I want to hear them say it, though. All right, give me a sec. Let me bring this up.
Under Oracle. By the way, it wasn't just Oracle under pressure today. Shares of Broadcom, which have been up nearly 4% after posted earnings last night, end of the day down more than 11%. Several analysts saying they expect the chipmaker to take a margin hit from costly AI build-out. So here we have two major pieces of the AI trade not giving us a good bullish narrative going into 2026. What do you make of this?
Yeah, I mean, this really feels like, I like to say AI fatigue. The AI spend fatigue is out there. And Meta really is the barometer for this. When years ago, remember when they were spending a ton on the metaverse? Then they stopped spending a ton and the stock ran. So now they spent a ton on AI and now they're not spending a ton and they're throttling back. I think the market is saying, show me something for the money, right? So when you look at AVGL, when you look at Broadcom, I hate the symbol. Like
I think it's BRCM in my head.
It's all the time. So when you look at the custom chips, and those are lower margins, this is what they do. So they do have the kicker with the VMware of software. So that's why I like the stock. I would actually be a buyer on this type of weakness. But when you look at the other ones, they don't have a kicker. And I think that fatigue is real.
I mean, for the Oracle story in particular, because this has to do with OpenAI data centers specifically, and there are questions also about OpenAI and how it gets its money. Then you have what Seema had mentioned, which is how the bonds are trading for Oracle, which are now trading at a higher for the September issued bonds, the $18 billion of bonds. The premium has widened. So investors are demanding to be paid more in order to lend Oracle this money. So that's gone up. CDS, the cost of insurance on the bonds, that's gone up. There is a question about every piece of the financing puzzle in the case of the Oracle OpenAI.
Yes, and I'm glad you made that distinction because I agree. So I'm with Steve in terms of, I do think that there is this spending fatigue. It's essentially, investors are essentially saying, listen, we need to see where the revenue or profitability is going for there so that we can kind of like bootstrap and infer what is going to be the actually upswing from the spin. But again, I do think these are two distinct stories. I think in Oracle's case, they really haven't been able to button down exactly what the debt raise is going to need to be and essentially how long and how much they're going to be willing to spend. Now, whether or not margins start to compress, I mean, we already know that they're kind of in a lower margin business. That is part of their value proposition, that they're able to provide servers and technology and software in this entire bundle for a lower price point. So I think the concerns there are real. I think OpenAI kind of opened the door for this whole concern when they mentioned the whole Fed backstop. But at the same time, I will say that you are seeing some positive things. You saw the Disney deal. So again, I don't really get. I'm always concerned as an investor, right? Clearly, you always need to be a little bit skeptical. You should be a little bit paranoid. But at the same time, I'm not ringing the alarm bells. On the Broadcom side, the truth of the matter is that you are eventually going to talk about, and we all talk about, when will NVIDIA's day in the sun eventually come to an end? It will eventually come to an end. And that will likely happen when there's more money being spent on inference than learning, than training. And so I think the concern there is that like all of their current customers, the hyperscalers, are eventually going to get their own custom chips. Well, when they do that, Broadcom is going to be the beneficiary. So for me, I think it's actually a way for you to broaden your exposure away from NVIDIA. I just think right now, to Steve's point, the fatigue has set in, and you're seeing Broadcom pulled down with that. They did have slightly weaker non-AI and software numbers, but the truth of the matter is that I think these are very distinct stories and should not be lumped in together.
Yeah, I do agree with that thought process that some of these are company specific. So I think when you look at Broadcom, I mean, that was trading near 40 times forward earnings. So it's pretty much priced to perfection. And I think that's one of the biggest problems here is if they're not going to meet a very high bar, you're going to see some profit taking there. But I don't think they have as many structural issues as you're necessarily seeing with Oracle. Like that's where people are really starting to question, can they actually really perform based on the amount of debt that has to come into this company. So I think when you look at those credit default swaps 5 years out, and you kind of hit the nail on the head with this, that's up 50% in just the last month. So just in the last couple of weeks, I mean, people are demanding so much more on insurance on that company because they're not sure if they are going to actually be able to pay out on that. And especially because OpenAI is a majority of their remaining performance obligations, that is a company that's not going to be profitable for several years in the future. So I think that's a bigger concern to me than what you're seeing in Broadcom.
So, look, I'm glad that they didn't try making that a story and lumping it in with the other hyperscalers, and they specifically said this is related to Oracle and Broadcom. So I'm not mad at that. And the reason why I like watching this is because lets me see other people's perspectives and test my analysis. Nothing there changes what I am thinking. I think this is crazy for Microsoft. I think it's crazy for the other hyperscalers. And Oracle deserved to go down. Broadcom deserved to go down. That's all there is to it. Should they have dragged the rest of the market down? No. But they did. So we'll see what happens. In short, I am not worried. We have a MIT in 3 minutes. So I am going to be ending the stream and I am going to watch a MIT stream. I mean, it is pretty much what they said. I don't know what you were listening to. So, look, we'll see. Oracle, what Oracle's going to be here. And like I said last night, Oracle to me is going to be dead money for a while. Maybe it bounces around, maybe it doesn't, maybe it goes down, but I don't see it going back to 300 anytime soon. I think Oracle will be dead money. Stream myself streaming a MIT. No, we're not going to do that. I want to go watch a MIT. I actually do not know what he is going to be saying. Him and I talked about some of it, but I'm interested in what he's got to say. I want to hear the new person he's bringing on. So thank you, everybody, for joining. I appreciate it. I will be back tonight. I'm going to make the link now for the FinTech Friday show at 10 p.m. with myself, Tanner, Tevis, and Roy. So if you're not doing anything tonight and you want to hear us talk about SoFi, Robinhood, we'll probably talk about BMNR, we'll probably talk about AI. We'll be on at 10 o'clock Eastern. Link will be coming out soon. I'm going to go tune into a MIT. Thank you very much for joining. Really appreciate it. Oh, and thank you so much, Neil. I appreciate it. And you know what, Neil? You're right. 75 days until NVIDIA. And you know what we're going to get? Jensen coming out. 65 billion in revenue. Probably 67 billion. I don't think anything changes for NVIDIA. Oh, wait. You want to know what changes for NVIDIA in 2026? China revenue's coming back. So, let's see what happens. Thank you, everybody, for joining. Let's go watch him. Do me a favor. Bombard his chat with code RED if you go there. Code RED. See everybody in the chat on the Mitch channel.